Highly Rainy here. You want to know the fastest way to improve your credit to get a mortgage approval? You're trying to buy a house? Let's dive right in. The first item is check your credit report. If you're not already monitoring your credit report with a good monitoring company that's giving you access to all three bureaus, I recommend you sign up for them right away. My FICO is pretty good. I like Smart Credit as well as Identity IQ. Credit Karma is not bad in terms of monitoring for accuracy and fraud. Don't be as concerned about the scores, though, in any of them. The idea here is to focus on the quality of the account. But check your credit report and address any issues. Make sure any errors get taken care of and any fraud be addressed. Number two, pay down your balances. The credit utilization, in case for those who don't know, that's the ratio of what your actual balance is divided by what your total credit line is. The ratio for the safety zone is 30% or lower. Above 30%, you get dinged. Below 30, at or below 30%, you don't get penalized. The lower, the better. When you maintain a low utilization over a long period of time, it will actually help your score increase. Thirdly, if you can, become an authorized user with a relative. I don't recommend buying trade lines or any of that stuff. But if you have a family member who has good credit standing and they could allow you to be an authorized user, that's a good way to boost your credit. Being an authorized user is also a good way to help your kids start off if you got young kids and they don't have a lot of credit. Now, with authorized user, they don't have to have access to any spending power, but just by making them on the account, your credit record for that account gets shared with them and helps boost their score. And the obvious one, number four, pay your bills on time. Now, I tell my clients a lot of times that there's really only but one always and never. I always tell them anytime anyone tells you always or never run. The only exception to that, the only always and never when it comes to credit is always pay on time and never be late if you can. That's the other than that, there's always variations and exceptions for everything. If at nothing else, set up reminders so it'll get paid, or do pay bank account deduction. But I have had folks who have run into problems with bank sourced pay deductions, because when the bank makes a mistake and the bank screws up, the creditor holds you responsible. So be careful with those. Reduce your existing debt. With that mortgage approval, debt ratio is very important. Debt ratio is sort of like that credit utilization, except debt ratio is looking at your total debt divided by what your gross monthly qualifying income is. The lower that ratio, the better it is for your mortgage approval. But the credit piece, the impact is where the credit utilization comes in at. Avoid new credit inquiries if you're thinking about buying a house or applying for a mortgage. Don't go out and think about starting new debt and start applying for other new debts, because the underwriter who's going to review the file is going to say, "Whoa, what's going on here?" Or are there any new debts coming along when you applied for something with that utilization? But it's always better to not apply for anything when you're preparing to apply for a mortgage. You want to diversify your credit mix. What I mean by that is you want to have at least one installment loan, maybe a car, and then a couple of credit cards. Not and have a good mix and show that you know how to handle different types of debt. Of course, you want to make sure you address any collections far before you apply for a mortgage. And then if you can increase your credit limits, again, that goes back to the credit utilization. So if you don't have the ability to pay your balances down, apply for credit limit increases. That'll lower your ratio that way as well. And then, of course, monitor your credit, monitor your progress as you're working through these credit issues. And then once you get your score to a good level and get your credit cleaned up, then you want to go and make that mortgage application.